All right, so Ben, you, according to your notes, you see reciprocal tariffs as kind of bullish. You think that's okay for the markets. That's understandable. What do you think about this new round of tariffs on autos, pharmaceuticals, and chips? What's your view on that?
Yeah, Frank, you see the adjustment that you saw, right? Like you outlined it really well to see which sectors are kind of underperforming in the pre-market. That's the adjustment, I think, but it's not as significant if you would think of it. You would think it would be a bigger sell-off for that matter if there's a real negative reaction. So I think what people are looking at is saying like we're just leveling these tariff rates towards one another. And as that other segment outlined, there's actually some progress on the other side of people looking, like in this case, Europe maybe bringing their tariffs a little bit down, right? I think this is the game that we're in, quote unquote, game that we're in. We're trying to negotiate for either side to bring the tariffs actually down. I think that is what the bullish element of it is, why these tariffs don't matter so much to markets at this point.
All right, so they don't matter to markets so much at this point, but at the same time, we are seeing a flight to safety, at least when it comes to gold. What do you make of gold just having a record run over the last couple of weeks? And also, you put out a note. I kind of expanded on it, if you don't mind. We're going to show the audience just the moves since the inauguration when it comes to the dollar and gold. The dollar down about 2%, gold moving up more than 7%. How should investors interpret this?
Well, gold has always been a safe haven in itself, like as an intangible asset. So it just gets that sort of attention about investors looking for diversification through a hard asset like gold. And you could say it's for inflation, you could say it's for uncertainty, or you could say it's for geopolitics. Either way, it gets that bid. It doesn't pay any interest of any kind, right? It's just a hard asset. But on the other hand, it's also about just the fact that we're in an environment where we don't know actually how these negotiations exactly play out. So I think there's a big reason why gold is up. I also think it's just because we do deal with some inflation coming through, and it's we're seeing in the UK and what we saw last week in the US. So I think these two combined were, uncertainty and inflation played a big role. So gold is here. It's probably going to stay a bit elevated until we get to this phase where we get more clarity on these tariffs.
All right. Again, you are also the founder of FedWatch. Let's talk about the Fed just a minute. Fed minutes, they're coming up later today. What do you expect? And we continue to see people come on CNBC. It was JP Morgan last week. It was Morgan Stanley yesterday, saying they expect as many as 2 cuts this year. Do you agree with that? And do you think the market needs those cuts to continue to move higher?
I'm again in the camp of that these cuts are at least in doubt. Of course, the Fed wants to lower rates because they want to do that because they see that then as a reason that they really won the inflation against inflation. Sorry, won the battle against inflation. But that's not just happening. I think what Waller said yesterday again was telling. He was very bullish on inflation going in the right direction, but now he's kind of changing his mind of like, I'm not so sure if this progress is really happening. I think that's the big issue for the Fed themselves. And I think this is debate in the minutes today, like how much progress is really made? What do we need to do if that progress stalls? And if worse, if it starts to change into high inflation, they would have to find out a communication to reverse course ultimately from a neutral to a tightening stance, which, by the way, not priced in the market at all. So I think we're at the point here where the market says still cuts. Fed says like, yes, that could be, but it's doubtful at this moment.
Okay, so you're doubting any cuts coming up later this year. With that in mind, are there certain sectors that changes your view on? Again, we started the year thinking 1 to 2. You don't think we're going to get any. Does it change your view on financials, materials, industrials, or some other part of the market?
Well, I'm with the market itself. Like, the market feels like cuts or no cuts. There seems to be rotation ongoing. And, you could tell from the performance of the big tech companies relative to these other sectors that you mentioned, the gap has started to widen a bit. You can even see it in the value indices in the Russell. They're outperforming relative to tech. And I think that's an indication of investors continue to seek diversification, movement away from the concentration risk of the market against the fact that cuts or no cuts, we're in a strong economy, keep rotating to opportunities where the value is better.